Many traders fail because they lack the understanding of the anatomy of market analysis. They analyze the markets focusing on the money rather than focusing on the process. If you follow the process, it presents to you a good setup, and a good setup presents to you good entries that will eventually bring the money. So in this video, I will teach you how to analyze the market with process and focus using a top-down approach, while I dissect the anatomy of market analysis in the process. In top-down analysis, you analyze the market from the higher time frame, while you come and pick your trade on the lower time frame. And the reason why that is happening is if you want to pick your trade on the higher time frame, the risk that you're going to be getting yourself into will be so much than when you pick your trade on the lower time frame. Lower time frame give you lesser risk, while the higher time frame will give you bigger risk. Okay? So whatever that is going on the higher time frame is what you need to focus on and align yourself with it when you get to the lower time frame. So if the higher time frame is telling you to buy, then you go and look for that buy on the lower time frame. You don't just buy on the higher time frame, but come to the lower time frame and look for the buy opportunity on the lower time frame. If the higher time frame is telling you to sell, then you come to the lower time frame to look for sell opportunity and sell. Okay, so that is why you need to analyze from the higher time frame to the lower time frame. You make sure why you are buying on the lower time frame is in alignment with what you saw on the higher time frame. Then how do you do that? Like I said, for us to analyze, there are certain things that we need to follow. So the first thing that you need to do in analyzing the market is for you to ascertain the direction of the market. Where is this market going? Is the market going up or is coming down? Those are the things that you need to do before you're able to make your decision. If the market is going up, that is trending up, you buy. If it is trending down, you sell. So you need to ascertain, is this market going up or going down for me to know whether I should buy or sell. Now, that is the first thing that I need to do. And that will help you, your market structure knowledge will help you in achieving that. So this is monthly time frame right now. We want to ascertain the trend direction for us to know whether we are buying or selling. If you look at this particular market now, right now, this chart, where is the direction of the market? With your market structure knowledge, you know this direction is down. Because if you look at it from here, the market starts from here, low, higher highs. Then it come back to this place and give us a low. You know, it broke this particular low. So this one now become a low. Then it give us a lower high, a lower low, lower high, lower low, lower high, lower low. Okay, so if you look at the direction, the way the price, you can see that we're in a downtrend. And with the knowledge you have in how to draw a trend line, if you draw a trend line, you can see that the trend line is tipping lower. So that means you are in a downtrend, but the trend line will properly give you that visual that you need to know that, okay, this market is in a downward movement. Okay, these are the knowledge you have acquired in your course. Okay, how to draw trend line, to market structures and all that. So now we know we are in a downtrend, but currently the market is retracing. This retracement means this market will get to a certain place and it will begin to come down again. Except if it gets to this highs here and break it, that is when we say, okay, the direction has changed again. This is your market structure knowledge now. So now we are trying to look out for the trend direction. So the direction we are seeing here now is on the bigger picture is downtrend. But if you look at this place, we are in a retracement. So a retracement on a higher time frame, you trade in the direction of the trend. But a retracement on the higher time frame might give you a trend, a good trend on the lower time frame. That is why we can't say, okay, we need to wait for this retracement to complete before we begin to sell again. No, you can go to a lower time frame to see a trading opportunity as this market is retracing now. Because this retracement now on the higher time frame will form a series of trend, ups and down trends in the lower time frame. So now let's now go and look at what is happening on the lower time. But on the bigger picture that we are seeing now, we see that the market is in the downtrend overall, but it's currently retracing, and that retracing could give us an uptrend. If you see the trend line here, you can see that we have an uptrend here. So let's now go and check. This is what to do in your analysis. You start from the higher to the lower. Now let's look at what is happening on weekly. Then before I continue, there are time frame, that you need to know in your analysis. Most time, as I do, I use 3 time frames for my analysis. I don't go. Some people use all the time frame. Some people use 2. Some people use 1. But I use 3. The first one is for me to know the overall trend. Then the second one is for me to execute, while the third one is for me to pick my trade, to enter my trade. So if I see if my analysis, is I see my analysis right on monthly now, that means I'll jump weekly to go to daily to execute, while I'll enter on 1 hour. You need to write those down. If I see and do my analysis on weekly, I'll go to 4 hours for execution, while I go to 15 minutes for my entries. If my analysis is on daily, I go to 1 hour for execution, while 15 minutes for entry. 5 minutes for entry. So I don't go below this for my analysis, below daily for my analysis. So now I'm on monthly now. So now let's go to weekly. We are trying to look out for find a trend. Now that is the first thing. My monthly is saying downtrend. Now, what is my weekly saying? If you look at the weekly right now, the weekly is saying, let me delete all this so that I'll be able to know how we got there. So if you look at my weekly now, my weekly is saying uptrend. Okay, my weekly is telling me uptrend because now we have series of higher highs here. We have broken the previous highs, lower high, and we have started making higher highs. That means when you are making higher highs, you are in an uptrend. So on weekly now, I'm in an uptrend. Though monthly is telling me downtrend, but here I'm in an uptrend. So I can't say because daily is telling me downtrend now, then I will not buy. If I've seen another trend in a lower time frame, I can make my decision then. Okay. So now weekly is telling me uptrend now because it has broken the previous lower highs and the trend direction has changed. That is why I'm able to draw this trend line now. This trend line, you can see that it's going up. Okay, so that means on weekly I'm in an uptrend. That means I can look for buy opportunity if I say. So now what is happening on daily? What is happening on daily? On daily, what do we have? You can see we have series of higher highs on daily as well. We start from here. What do you see? High, low, higher highs, higher low, higher highs, higher low, higher high, higher low, and higher high. Okay, so that means on daily we are also in an uptrend. So that means from weekly to daily, what we need to be looking for is buying opportunity because we are in an uptrend. Okay, what we'll be looking for is buy unless we have change of trend again. That is why we now continue the sell. You understand now? Okay, so now if you my weekly is telling me buy, my daily is telling me buy. So that means what we're going to be looking out for in this market is buy because my daily is telling me the direction is uptrend. So now that I've been able to ascertain from my weekly to daily that we are in an uptrend, then what is the next thing to do? The next thing is now to look at the location where I can position myself to buy. I know in this market I am buying. Now, where can I position myself to buy? That is the next thing that you now need to look out for. You have seen the direction as uptrend. Then which location are you going to position? You can't just jump in because the market says it's an uptrend. Like for example, when market was here now, you jump in here and in reverse, you take out your money, you lose money. So you need to position yourself at a particular location, a safe place, a safe location for you to enter. You don't just jump in because the market is buying, then you just begin to buy. No, you need to position yourself at a safe place for you to join the market, to join the buy. So that is what leads us to levels, or your knowledge of demand and supply, or support and resistance. Remember that in your course. Okay. So now let's not see how we can plot out our levels for us to know where we can join the markets. Okay. So I want to use both demand and supply and support and resistance. So if you look at this trend now, the way it's printing the higher highs, what do you do at demand? You buy. At supply, you sell. Or at support, you buy. At resistance, you sell. So now let's go and look at for our demand and supply, or support and resistance. So if you look at this place now, this is our previous low, high, our previous low. This is higher high, higher low, higher high. Now it has come to higher low now. So on your lows, highs and lows, that is where you plot your support. Here, we call this place a resistance. Okay. Here we call this place a support, or we call this place a demand, and this place, supply, while this place is demand. The moment they break this one now and pull back, this one has become a demand again, and this one has become supply, or support, resistance. So when this place was broken, this resistance was broken, it has turned to support here. Use it as a support here. So in that case, you can draw your lines here, okay, as a place to watch. That's broken the resistance and it's using that as a support. So you can look at this as if a support and resistance, you look for your buy and support. And if a demand and supply, trader, you look at your buy, look for your buy at a demand. So this is our support and our resistance, support now, and our demand. So that means at this level now, this is where we're looking for our buy. If you practice very well, you're going to understand. So we'll be looking for our buy at this place now. Well, this is a support. This is our support now. This is our support level. So we are looking for buy right now. So to draw another support level now, this is another support level that we can draw. Your low, your previous low is your support level, while your previous high is your resistance level. Just take it like that. Okay. So this is another demand level now that we can draw. If you want to draw another one, this is another one now that you can draw. This is another demand level right now that you can draw. Any low that breaks previous structure, that is where your demand is. And you can to ascertain that place is strong, that the price will get there and react. You can extend it to the left to see whether it is touching another levels there to make it zone. If it is one, we call it demand or support. But if it touches others, we call it zones. So whether it can, when it becomes a zone, it becomes stronger. But if it is just one, like this one is just one, it's not so good. But this one that has touched another now, in the resistance here is supported, this has become zone. So this place is more stronger than this place. So we let it touch one or more levels to make it stronger. So that is how you draw your level. Like here now, we have a very strong level now because it broke this place, you use it as support, and it's testing it again. So we have resistance here, we have support here, make it a strong level to watch. So now, after you have been able to draw your level, okay, what the next thing for you to do is now begin to look for the reaction. You don't just jump in immediately, because you trade. I told you trade at the level. You enter your position at level, but you don't enter immediately. You now need to look out for the reaction of the market at that level. Okay, what will price do? Because when price was coming down here, it can break it and continue the downward movement. Nobody is sure of what the market will do here. It can break it and continue downward. Then it can be rejected. The price could be rejected from here. So you now need to watch the reaction of price at that level. Will it break it? Will it be rejected? If it break it, that means you join the sell, you continue selling. But if it's rejected or bounce off this support now, then you buy. So at this level right now, what we need to be watching right now is, will this price bounce off this support? If it bounces off, then we'll buy. But if it breaks it, that means we are not buying, we're going to sell. So we need to watch the reaction right now. So that one will not take us to lower time frame for us to see the activities that are going there. And when you are watching, the levels, what are the things that you need to use to do? You will be watching patterns. either chart patterns or candle patterns. In fact, chart patterns, don't let us talk about candle patterns at this level. We'll be watching chart patterns. All those chart patterns, they are the ones that will give you information whether the price will be reversed from that place or to continue. And we have various of them. You can check out your course on chart patterns. We have, so on this level right now be looking out for your chart patterns. There are reversal patterns that we have, double bottom, inverse edge, head and shoulder. Those are the patterns you now be looking for here. So if you see anyone here right now, you will know this price is going to reverse from here. But if you don't see, you don't buy. You have to wait until you see a pattern that will give you information. So what I'm looking now, we are waiting for here right now. This is a live chart on GBP USD. So what we are looking for here now is the pattern that will give us the information on whether we should buy. So that is what you are now, all these things we are doing, we are analyzing the market before we can pull the trigger to buy or sell. These are the things that we need to do. These are the components you have learned in your course. Okay, all these components, they are the ones that you now put together in your analysis. You learn market structure. That is what we use to ascertain the trend. You've learned trend, how to draw trend line. You've learned how to draw the level using demand and supplies and all that. Now you have learned chart pattern. So you are now looking for that chart pattern now. Okay, and if you look at this price right now, you can see that we have something like double bottom here. You can say we have a neckline from here. Okay, and what happened when you have a double bottom on the support? That is a reversal. So the moment you have a double bottom on the support, that is a sign that this price is going to reverse from here. Okay, so what happened to a double bottom? You have a neckline. When the neckline is broken, that means you are having a reversal. When this neckline is broken, that means this pattern has been completed. Okay, and it has confirmed trend reversal, just like you have it here, double bottom, neckline broken, and you can see the drop. The same thing is happening here. Double top rather. The same thing is happening here. You look for double top at the resistance, double bottom on the support, at the support line. We've seen double bottom here. The price is about to break the neckline. If this price is successfully broken this neckline, then you have your reversal, then you begin to buy from here. So now what we need to wait for right now is for this thing to break, and your break is not successful until the body of the candle closes above that neckline. So now if this 4-hour candle right now closes about this line that I draw now, which is the neckline for this double bottom, then we'll say we have a reversal. All we need to now do is to now use the knowledge of your entry strategies to enter. Okay, so at this point right now, we are done with our analysis. We know we are buying on this market, and we are now watching the reaction of the market for us to know when, because the timing of pulling the trigger is very, very important. You don't just pull the trigger. That is why forex market is not just something that you jump in anyhow. You know, the timing of pulling the trigger is very important. Your analysis is fine. You've done your analysis, but the timing is also very important. That you pull the trigger is also very important. Analysis is saying we are buying right now. With all that I'm saying, GBP USD is going to buy. If this candle closes above here, it's going to buy. But can I jump in now? Yes, I know it's going to buy, but can I jump in now? The answer is no. I cannot jump in now until I see all my confirmation in place. That is when I can jump in. I don't have all the confirmation in place right now. The market has not given me all the information that I have that I should jump in. And I'm still watching. Okay? So these are the things that you do in your analysis. So I want to buy this market right now, but I'm still watching. So when this thing closes above that place. So after that, then you now do what? You now enter the market. So that is what you do in top-down analysis. And what do you use to enter the market? If this one closes right now above here, the retracement, you use your candle, and that's where the knowledge of candle, pattern now comes in. There is difference between candle pattern and chart pattern. Chart pattern is the one that gives you the trend continuation, trend direction, reversal. candle pattern will tell you what they are doing, the market makers are doing at that particular time. Are they ready to move? The chart pattern is telling us, okay, we are about to reverse from here. We can't go lower again. We want to move the price higher. Okay. But when are we going to move the price? Nobody knows. It's that candle that will give you the information that the price is about to move. So if this completes now by closing above, you'll now be looking for a candle that will tell you it is time for you to jump in. That is all that you do in analysis. So you don't just buy or sell. You put all those components you have learned together for you to make your decision on when to buy in the forex market. I believe I've been able to put justice to this. If you have any question, just drop it in the comments below and I will respond to you.